Hello everyone, welcome to Nugini Forex Trader. In this video, we are going to do an analysis on the USDJPY. We will start our analysis by marking out the highs and lows of the weekly time frame. Then we will go down to the daily time frame and mark the highs and lows. Next, we will draw further down to the 1 hour time frame where we are going to identify the liquidity. Liquidity is always the reason why market moves into that direction. Like if the market goes up or run bullish, it's because it's going to take the liquidity before coming down. Likewise for the bearish run, if the market comes down, it's running for the liquidity. Once it gets the liquidity, it will reverse or run bullish. Then we will identify PDRAs like the fair value gap, imbalance, order block, breakup block, and finally we will draw down to the 15 minutes, which is our execution time frame, and we will draw the path or the trend direction. Before we jump straight into our lesson, please don't forget to like and subscribe to my channel so that next time I post a new video, you'll be the first to get the notification. Thank you. Let's start by analyzing the weekly chart. Okay, we go to the weekly chart. Here at the weekly, the major trend was down. Last week we had a bullish run. This green candle going up, but on Monday it went out. It went up and took out the liquidity on the upside. It went up and took out this liquidity here. It went up, took out the liquidity on the upside, and then it retraces back down, and it took the liquidity on the downside here. So now we are in this red candle, so we'll drop down to the daily time frame and see yesterday's trade and previous day's trade. Okay, let's go to the daily time frame. We are on the daily time frame now. As you can see from the daily time frame, this one is yesterday's candle. Yesterday's candle was coming down. Here we have this one here. So we have to draw down to this yesterday's candle. That's the closing. That's the opening, and this is the closing. So let's draw down to 15 minutes or 1 hour, and we will identify our PDRAs or the liquidity on the 1 hour or the 15 minutes. Let's go first to the 1 hour. Okay, here at the 1 hour we can see this fair value gap on the side. Actually it's not a fair value gap because this one has filled the green candle down on this side. So see if we can identify any form of fair value gap on this red candle down. So we'll draw down to 15 minutes. We are on the 15 minutes now. We're on the 15 minutes. Let's remove this one first. Okay, this is the opening and this is the closing. Let's see if we can identify any. Yes, we can see a fair value gap here. There is a fair value gap on this side. On this side, this one has not been filled, so we expect the market to move that way. That's to fill out this fair value gap on this side, and we have this liquidity on the downside. Okay, now let's draw expected trend line. Let's draw our expected trend line. We have two options in here. One is for the market to go up, take out the fair value gap on the upside and drop back down, or we have the market that will come down, take out the liquidity and go up. So let's draw the one from the upside first. Market will start here, it will come here, it will drop back, take out the liquidity here, it will come up to the opening and it will continue down. That's one expected way the market is going to move in today's trading day. But let's try the other one. We expect the market to open here, continue come down, take out the liquidity on this side, expect it to go up there, fill this fair value gap, take this one out. We expect it to come back to the opening here, and then we expect it to continue up like this. Okay, we have these two options. We have this option A is for the market to go up, to take out the fair value gap on the upside, and then we expect it to drop back, take out this liquidity, and then we expect it to go up there to the opening, and then we expect it to continue down. Or we expect the market to come down, take out the liquidity on the downside, and then we expect it to go up there, take out this high here, go up there to the fair value gap, and then we expect it to retrace back to the opening, and we expect it to continue up that way. Okay, now let's draw our orders, put our orders here. Okay, this is what we're gonna do for the buy side. This is what we're gonna do for the buy side. And this is what we're gonna do for the sell side. Like this. Okay, this is what we expect the market to do. If the market comes down and take out the liquidity on this side, then we expect it to continue up like this. So we will put our order here, we'll put our buy limit order here. But if the market goes up like this and take out goes up like this, then we expect it to come and fill this fair value gap on the upside, and then we expect it to drop back down and continue down. So we will put our order here, we'll put our sell limit order here. Okay, that's all for today. With that, thank you all for watching, and see you in the next video.